Hey guys, it's GeoCrypto. Welcome back to a new video on the channel. Today we'll be discussing part 2 of the Trading for Beginners series. Today we're going to be talking about uptrends, downtrends and different market phases. So let's just jump straight in. We're going to be looking at the BTC Bitcoin chart as an example. So let's jump into it. Now as you can see, I've already prepared some annotations on the chart to make it easier for you to to see what we're looking at. I've labeled all the different phases as well. So let's zoom out a little bit, and at first let's just discuss what everything means. Now the first trend we can identify is a downtrend, basically meaning the price is going down, and you can draw a line at different high points where the price touches, fails to break above the line, and bounces back down and keeps going, making lower lows and lower highs. Now every time we touch the line and it bounces back down, we call this a new lower high, a lower top. And as you can see very clearly here, we make on Bitcoin around the middle of November, we make a new all-time high at around 69k. Since then it's only been downhill. Now we're going down to a low of 53, bounce back, lower high, bounce lower, lower low, lower high. As you can see, this high right here at the end of December at 50k is lower than the previous high at around 58k. And that's basically how downtrends work. You're trending down, the market is zigzagging, but what it is doing is going down. Now right here, in January 20th, we can see it touched the downtrend, the trend line again, and it reacted quite heavily to this, as this is the big crash that we've seen a couple days back. Now we're climbing back up to the trend line. My guess is it's going to be hitting the trend line at around 42 to 40k, so around this point here, if we keep trending up. And yeah, it's exciting to see what will happen, because I'm not the only one drawing this trend line. Many people are, of course. So if someone sees this trend line, sees Bitcoin reaching this, they might short, because they expect it to bounce off, just like it did here, just like it did here, like it did here. At all these points it bounced off the trend line, and yeah, it creates more selling pressure and more downwards pressure, so you never know what's going to happen. But yeah, I don't expect it to break over the downtrend anytime soon. Now the other trend, of course, we have is an uptrend, which well, we were in from September to about October. As you can see, price starts going up, it comes back to the trend line multiple times, and this is the uptrend. If we can draw it a bit further, you can see here it breaks the uptrend line, and this also means the end of the uptrend. And then we get into the distribution phase, and the distribution phase is basically when more experienced traders, they can see right here the market is slowing down. We're not making any new higher highs, we're just trading sideways for a bit, and yeah, they start loading off their bags, taking their profits, and getting ready for the new downtrend, which, well, as you can see right now, it's been happening since early November till now, so almost 3 months already. And yeah, the people that sell here are the smart guys. Now the other part is the accumulation phase, and it is what happens after a downtrend. What usually happens, you don't have a downtrend and then spike up right away. You usually have a few days or a few weeks, or however long it may be, in which price moves sideways. It doesn't make any new lower lows, as you can see right here. It went lower low, lower high, lower low, lower high, and then here after this point it fails to make new lows. This is the low point. You can see it doesn't get below that in this period of time. So what's basically happening right here, people are starting to step in. They think, okay, it's around 40k, 45k, it's a good price. They can see the downward selling pressure is slowing down. And what they do, they step in right here. They hold their bags, and like I said, the smart guys buy in the accumulation phase and they sell in the distribution phase, and they ride this all the way out until the trend line gets broken right here. Now those are the 4 terms most important in trading and using the trend line. There is one more thing I would like to discuss right here, and it's something I've actually drawn an example of, for example, right here. As you can see, from July 20th all the way to about August 23rd is when it made the last new high of the uptrend. You can see that even during an uptrend, price is just generally moving up, chugging along. If you go to the lower time frames, if you zoom in, you can see right here that even during an uptrend, so price is going up, you can still have downtrends. Now, how that's possible is quite simply the difference between time frames. Like what I'm doing now, I'm using the 4-hour chart, which is, well, in my opinion, great for just being able to see the overall trend and kind of making a guess of where the next month or 2 is going to take you. But of course, if you're looking at, for example, well, right here in this uptrend, let's look at the 15-minute chart. Let's see. I need to get back there. Well, it doesn't really seem to load the 15-minute chart. Let's then just take a look at this one. This is the period we're currently in. So it's, as you can see at the bottom of the screen, about half of January, and we've been moving lower and lower. But as an example, let's draw it here. You can see that right here, for a period of, well, 20th of December till around Christmas, so for about a week, we were in an uptrend. If you bought here and sold at the trend line, it's 12% right there in a few days. But then, of course, we do need to respect the larger time frames, and we need to respect the movement that the overall market is making. So no one is saying in a downtrending or in a bear market you can't make money by going long. Just don't intend to go long for too long of a time period, because of course you need to respect the overall trend. If you're just jumping in a quick trade, see, let's say for example here, you see, okay, it's getting very overextended, the downwards pressure is slowing down a little bit. You see this as the last high. You see the market not making a lower low right here. Then you could have bought on one of these candles, ridden it to around your trend line. Of course, it's always just an estimate, so don't be too precise with this. Just take your profits a little bit below the trend line, or put your stop a bit above the trend line just to be sure. Like you can see here, it spikes above it first for a little bit before it really starts trending downwards again. But yeah, you can, in short trades, shorter term trades, you can still make a profit by going against the trend. I just wouldn't recommend it for beginners. Now here's another example. This one is the one I just showed you. In an uptrend, it's the same thing, you know, you're going up very fast. You know, you can even draw a trend line like this. It's a very sharp trend line. It starts basically all the way there. So price moves up very sharply. You can see it crossing right here. And then what you could do, you just go short when it crosses it, put your take profit at about the trend line, and you still make a 10% gain on your account, or gain on your position, sorry, if you go short. But once again, don't expect it to be for very long. After an uptrend, usually you don't see a downtrend straight away. You first see the distribution phase, where people that bought during the accumulation phase take their profits, and then we start In crypto, usually we just see a very sharp drop down. It happened here quite similarly as well. You have distribution. You could even call this part distribution as well. And then like in a few hours or few days, you have 10-15% drops, touches the trend line, another, what is this, 20% drop, something like that. Yeah, it goes almost minus 30%, but then back to like minus 15. But yeah, that's about it for the trend lines. Don't use them in a way to make calls on your trades. You really need different confirmations before entering a trade. Just don't only look at like, oh, it's almost touching the trend line, I'm going long right now. Because yeah, as you can see, if you did that, for example, you did it here, you saw it hit the trend line here once, twice, 3 times, you thought, okay, it's at the trend line right now, I'm going long. Yeah, there's very little time that you would have been in profit. And even if you were in profit, let's say you entered at the touch here, you know, at the top part of the market, you're in profit like only a few percent, but where the price is right now, you'd be down 40%. So yeah, don't make calls based on just it touching or not touching the trend line alone. Really do more research than that, otherwise you're really going to get yourself wrecked. Last thought, please subscribe to the channel, leave a like if you enjoyed the video, if you found it helpful in any way. If you have any more questions about this or suggestions about what else you'd like to see, just leave a comment down below. And yeah guys, thanks for watching, and I'll see you in the next one. Bye.